Hey. I'm not sure. Let me see how to get my camera. Hey, what's up?
Where?
Oh, sorry, I couldn't hear you. Can you hear me?
I can hear you, yes. And you can hear me.
I think somebody at Circle constantly says, I'm gonna give you the business every time you log into Circle.
It really doesn't like you, does it?
It doesn't. It doesn't.
I
Circle
just
says, we know what you say about us. Hmm?
I ended up duplicating the event so that because it looks like a recording started, but then you backed out. Hi everyone. Are you able to turn on your screen, LaToya?
That's what I'm trying to do. It's not allowing me to do that.
Did you allow access or
Yeah.
permission?
Yeah. Are you calling me or is Joe calling?
I'm not
Or
calling
Joe?
you.
Yeah. Yeah, I allowed access on there, so. Yep. Give me 1 second. Hello, everybody. Um,
Do you want to leave and then come back and maybe it'll allow
yeah.
you? That seems to work for you.
Okay. All right, I'll do it again.
Okay. Oh, Alan's here.
Hey.
There you are.
Uh-huh.
I am. I made it.
Yay.
Hey.
The two people you want to see are here. Okay, cool.
Yeah.
So is this the only room, right? Everybody's in it, or
Yeah, the other one, I think you started it and then maybe closed out the window or something. It closed, so it
yeah.
posted the recording already. So I just duplicated the event. I'll go ahead and delete that one in Circle so no one gets confused, but
Mm. Okay.
you should be good to go. Everyone will see that this one is active and they can just join from the bottom left-hand corner of the screen.
Okay. Thank you so much.
You're welcome. Have a good one.
All right. Be blessed.
Bye.
Hey, everybody. If hopefully, I think some of you, I see some familiar faces. Hey, Alan. I'm
Hey there.
LaToya, one of the consultants. Sorry, we're just having some technical difficulties in Circle, and if you've been with me for a little bit, every time I log on, there seems to be a problem. So we're here, and today Alan came back. I know he was with Group Practice Boss last week, and he's back with us, and I'm excited. And we are going to talk about any and all bookkeeping or accounting questions you may have with your practices. So at this point, you all are either in private practice, a solo practice, or are starting a group practice, correct? Okay. All right. So I'm going to give Alan, just for time's sake, space to introduce himself. And then he'll go in, which I imagine a short presentation of sorts. And just like we did last week, if you have any questions, you can feel free to put them in the chat. You don't have to wait to the end to ask questions. He's pretty cool about asking as we go. So Alan, I'm gonna let you have the floor.
Absolutely. Thank you. Now, quick question, Latoya. Do you want me to kind of go over what I went over the last time, or
Yeah,
is
this
this
is
more open forum Q&A? Because I want to make sure to kind of
mhm.
get everything in that everybody wants to talk about.
This is a different group, so I think it's okay to do a very brief presentation like you did last time,
Okay.
and then we could do open. Now, like I said, if anybody has any questions, feel free to
Yeah.
we can just get at it if you guys know if you have a question immediately. Wait, does anybody have a question off top? Because we can just flow that way. Because I'm okay, and I think Alan's
Yeah.
okay.
Either way, because that's why I wanted to make sure to catch the flow. I'm flexible
Hmm.
with whatever works for you guys. I'm here to be a helpful resource. Anything that you guys want to know about taxes, bookkeeping, accounting, payroll, all that good stuff. So, but I guess so. While people are thinking, I can at least kind of go into my quick intro, give you guys a little bit of info and background on me. So I'm a CPA, and I own my own practice. And in my practice, we actually focus on helping mental health professionals, most of which who own their own private practice. And so, how I ended up getting into that is one, I've always been a little bit of a self-proclaimed business nerd. I love all things business, always have been. My parents were entrepreneurs, and ironically enough, and not surprisingly, my parents own their own tax firm. And so I was actually doing taxes in high school. And so my dad was showing me how to do taxes in high school. And so went off to college, went to Trinity University in San Antonio, got my bachelor's there. And, I was like, yeah, probably won't go the accounting route. That's, just what my parents did. Doesn't mean I have to do it. And I started looking into engineering, looked into computer science, and yep, nope, none of those stuck. But I love business, and so did that. Got my MBA, and then my CPA, and so started my own firm. And so how I ended up working with mental health professionals is because ironically enough, I guess the stars were aligned. Is my wife is a therapist, and so she has her own group practice, and so in naturally helping getting her practice set up, running. I kind of learned the ins and outs of it. And then that kind of helped me learn, a little bit about how y'all's brains work, which is very different than mine, but that's why we work well together. So, because God
Yeah.
bless, I couldn't do what y'all do, but most of y'all wouldn't want to do what I do because I love numbers, love spreadsheets, love formulas, pivot tables, all that stuff is my jam. But
I want
but
to
go
we
ahead,
do have a question from Nate.
let's go for it.
But I just want to say I'm extremely impressed you were doing taxes in high school.
Yes.
I was a student algebra one in the summertime, and you're doing taxes. So that's
I was doing tax
yeah.
returns in high school. Yeah, pretty much. So I absolutely loved it. And so yeah, so in
Let
helping
me
her get her practice set up, that's how I wanted to kind of specialize and focus on helping you guys understand your businesses better. Your cash flow, your P&Ls, balance sheets, all those different type of things and then to really ensure the tax savings piece of it because as business owners, there's so many different things out there to ensure that you are not overpaying in taxes. And so that's what we want to do is be informative, give you that information, implement those things to save on your taxes, keep your own wealth, help your businesses grow because then you can have a greater impact for others. And so that's just what I'm here to do.
All right, we have one question. Thank you for
Go
that,
for
Alan.
it.
We do have a question from Nate. Nate asks, can business startup costs be deducted from taxes?
Yes, absolutely. So, business startup costs, the IRS has a couple of stipulations on it. They kind of limit you to 10K in strictly business startup costs. And anything over 10,000 has to be amortized over 15 years. Meaning that, so let's say if you have a total of 50K, then you can take 10K in that first year, and that remaining 40 has to be split up evenly over 15 years, over the next 15 years. So, little bit of a future deduction. However, what I always want to do is really determine what's a true startup cost or what's your beginning operating cost because operating expenses, even if you aren't making money, can still be deducted in that same year. So I want to make sure that we're not pushing, deductions forward that we can actually utilize this year. If you're operational but just not making money, then those are still operational costs that we can use in the current year. However, if you're not operational and they are true startup costs, then those do have to be amortized. After 10K, they have to be amortized over 15 years.
Okay. All right, we have some more questions. This is
Let's
good.
go for it. I love it.
Vicky is in the DMV area, and she has a question. She has two. At what point do you recommend switching to an S corp? Hey, Vicky.
Great question. I typically say I like 100K gross revenue or at least 50 to 60K net, give or take. Because once we are having at least 50 to 60K net, then you're probably saving at least 5 to 6K per year in taxes on that. Because S corps are, more red tape. You have a whole separate corporate tax return to do. You have to run payroll. So, there are some additional costs. If you're working with somebody like me, I charge more for S Corps just because there's more hoops to jump through. So adding an S Corp is going to be more costs. So switching to an S Corp to save $2,000, you're probably coming out about even, bare minimum. But once you're at about 50, 60K net, so let's say you make 100K in profit, but let's say you only have 30K in expenses. Well, that gives you a 70K net. Then, yeah, we need to be looking at an S Corp because that'll probably save you, I'll say probably about 10K, at least, by doing that. So, yeah, that's my general rules for S Corp.
I follow up on questions about what that entails to actually switch over, because it seems quite daunting, not just in terms of setting up payroll for myself, but I imagine actually it might not be so bad because I'm going to put people on payroll in the coming year as I'm looking to hire. So perhaps that might be the easy part. But what are the costs associated with even just the initial S Corp filing? And then the other thing that my CPA had mentioned was that it would, I have conflicting things actually, that I would have to get a different tax ID number associated with my LLC when I switch to an S Corp, which I assume means I have to then change all of my bank accounts, and that just seems messy. I don't want to do it.
Nope. Incorrect. So there's a couple things you can do on that. Great question. So there's a couple things you can do. So think about it this way. When you have a LLC or a PLLC, that is a business entity. Switching over to a S Corp is a election with the IRS. So that election with the IRS does not change your business entity in and of itself. Because I've taken PLLCs of, groups, solos, and then we elect the taxation with the IRS to be taxed as a S Corp. So you don't have to change your formation or your EIN or all of that stuff. You can be a LLC or a PLLC, but elect to be taxed as an S Corp. And then that is documents and forms and stuff that we file directly with the IRS, on your behalf, like saying, hey, we're this LLC, we're this PLLC, we want to be taxed as an S Corp. And then now once you do that, I tell clients once we send that form off and once we send all that paperwork off, we start treating you as an S Corp then, meaning that because truth be told, the IRS is going to take months before they tell you if you're an S Corp or not. And so we want to, because perfect example, we do late election S Corps where essentially for any year, the on time filing for it is March 15th. But I like using it as a tax planning tool because it's like, how often do we know if we're going to cross that threshold by March 15th, coming into a year? But we can do a late election mid-year, June, July, August, September, because then we kind of know how much income we've made, if we're going to cross that threshold, if it's going to save us more money, so on and so forth. And so in doing that late election, if you're doing that in September, it might not be until January or February when you officially get that notice from the IRS. So once we send it off, we start treating you as an S Corp then, meaning setting up your payroll, running that, looking at reasonable comp for you, all that kind of stuff. So, but you can still, but to your initial point, you can still be a LLC or PLLC with an S Corp status because that is directly with the IRS and not with your, state board or changing your formation.
It's the same tax ID number, essentially.
Tax ID number, correct. Because the IRS, once you elect it, the IRS changes it on their side to say, hey, this was needing to, this ID, this EIN was a, solo, so it needed to be done on a Schedule C. But now we've elected them as an S Corp, so now their tax filing for this should be an S Corp, 1120S that we have to file. So you can use the same tax ID number.
And do I have to submit, if I were to do it for, let's say I want to do it for the 2024 year, am I supposed to submit that now or say like this is my anticipated start for the transition, or how does that work?
It could be submitted now, and you just, because on the form you fill out, Form 2553, you just say, hey, I want to be an S Corp as of, 1/1/2024. And so, yeah, absolutely that could be done.
And then Alan, we got a few more questions. The second part to Vicky's questions too is like, what payroll systems do you recommend people using?
Yeah, personally, I like using either Gusto or ADP. That's what we utilize. We don't typically run payroll in house, but we monitor, all of our clients' payrolls, make sure the 941s are filed, make sure we're doing reasonable comp. If we need to change something, we run payroll for our clients, all that kind of stuff. But we use either Gusto or ADP platform to do it.
Okay. Sherry has a question. Oh, go ahead, Vicky.
Sorry.
No, go ahead.
Curious, with the unemployment insurance filings and things like that, is that something that the payroll system can do, or is that something that I should task with my bookkeeper to follow up on and make sure everything is filed properly with the state? But I'm just wondering about that, and to be honest, I'd rather outsource that if possible.
So, say it again, you say the unemployment filings?
Yeah, I think for unemployment insurance,
Oh, yeah.
I'm in DC, so that has to be filed, I guess. I'm assuming
Yeah,
that
that,
through
that
the
should
payroll
all that should
system.
all run through your payroll system. Who do you use for payroll now, or do you have payroll set
I
up?
haven't started yet, so that's why I was curious about it.
Yeah, they should typically run it through there, and that's another reason why we utilize companies like that, because they're professionals in it. I'd rather just monitor it than to be doing it on the front end, especially because we have clients in about 35 states, and so every state is so different with that. And so yeah, but usually they should be able to run that and do the state filings. We just always kind of go back, double check, make sure everything's done right. If there's anything, you get letters, we handle that stuff to, to make sure everything's smooth. But yeah, they should be able to handle any, specifically state filings too for your payroll or unemployment.
Thank you.
Hmm. Of course.
All right, thank you, Vicky. So Sherry has a question. She said that she still hasn't filed her 2022 taxes. She opened a group, and things got complicated and overwhelming. So she just wants to know what consequences is she looking at this point, and then other than scheduling with her usual CPA to deal with this, what should she expect / do?
File them as soon as you can. If you owe basically, you're looking at about a 30% penalty, because the IRS charges 5% per month in just a non-filing penalty. And so even if you, and keep this in mind, even if you happen to file an extension, once the deadline for extension passed, which was last Monday, then it's as if the extension never existed in the first place, and everything goes back to April 15th. So all your penalties and interest go back to April 15th moving forward. So they charge 5% per month in a late filing penalty, but then they do cap it at basically 5 months, so 25%. So you're looking at 25% non-filing penalty. You're looking at a 0.5% of non-payment penalty, and then of course interest each month. So that's what I say. So let's say you owed, simple math. Say you owed $1,000, then you're probably paying about 1350 back, give or take.
Okay.
That answer all those questions? I think so. So I would say the next move, what should you do next, is just to get them filed ASAP so you can, nip that penalties and interest in the bud. Um, that would just be my suggestion overall.
That's helpful. Thank you.
Of course.
All right, so Michael Rodriguez has a question. He says, I'm starting a small group practice. We are not seeing any clients yet. We have an LLC and some expenses we have accrued, including website, planning to enroll in trainings and certifications. What are some other usual startup costs, and how do we file taxes? Do we have to, if we have no income coming in? And do we use one accountant for the group practice? And what sort of financial things should we be setting up?
Good question. So I would say, yeah, so website design, yeah, training certification, just what you mentioned. Some other usual startup costs are, obviously if you have an office or something like that. Let me see. Basically, I would just look at it like this: like, what are any and all of the things that you have done to get your business in line? One of the underutilized things that people forget but can add up quickly is mileage. Like if you're going to different places, different stores, meeting your staff or having meetings elsewhere, going to pick up supplies, furniture, that mileage is business deductible too. Um, and that's a little small thing that can definitely add up. We're big believers that, every little deduction adds up in the end. So that's something that often goes underutilized is, mileage, ripping and running, doing different things like that, as you're getting started up. Um, let's see if you've had any professional consults, I know you mentioned training certifications, but yeah, if you've talk to the CPA, you talk with, a bookkeeper, talk with a lawyer. Of course, all those different fees are deductible. If you had any business setup fees, for LLC, all those things are deductible too. I'd say those are probably the usual startup costs, but yeah, think about any and everything that you've done that, you know, in trying to get started and get set up, or anything that you spent or any time you spent. And those are all typically your usual deductions there. Um, let's see. So, what do we do if we have no income coming in? Do we use one accountant for the group practice? I would definitely use one accountant. Um, I think it just works smoother that way, because they know everything. Perfect example, like just to kind of give you insight on what we do is, we're usually the only accountant for the entire group. And then what we like to do is we do the personal tax returns too. We include those as well. Sometimes I've had people who've come to me for, their practice, like maybe let's say their practice is a S, but they have somebody else doing their personal. That's okay. I still like doing it all because one is still going to flow into the other. And when you have, let's say we're switching to a S, you have your own corporate tax return, but that corporation doesn't pay any taxes because it's passed through. So I, on my end, want to make sure that everything's being implemented into the personal return and that we're not missing any deductions. And then it just helps with, the bookkeeping, the payroll, just kind of having all of that in one place. So I like using one person. I think it could get disjointed and, miscommunication, which could eventually cost you more money having multiple. And what do we do if we have no income coming in? You still get to write off those things. Like I say, that's where we would, I have to determine a little bit more on if what we were talking about startup costs on, are these true startup costs, or are we just operational but just not making money yet? That's the kind of the line that we'd have to draw there to see. But yeah, if you have no income coming in, then hey, it's a bigger tax deduction for this year because all the expenses you take get to offset all your other income, so it saves you a little bit of money. So you kind of get some of that money back. Um, and then what sort of financial things should we be setting up? Certainly, like bookkeeping, payroll, items like that, I think are very important to kind of get that foundational set. It's good you already have an LLC, so that's perfect. Yeah, if you get your website and design set up, that's great. Um, I don't overdo it because I know as, practice owners, as entrepreneurs, you kind of get that shiny object syndrome, where it's like, ooh, this, ooh, this. I like having clients focus on what is the one biggest thing I need to get to the success that I want over the next 6 months. So that's what I would really hone in on. Is it, hey, we got to get the office set up, of course. We have to, we want to be out there, have our website set up. But hey, if you're doing, certain other things, then hey, a website doesn't have to happen right now. Do we want it? Yes. Is it a must? Sometimes. I like kind of categorizing things in three different buckets. So what is something that we have to do right now? So that's the first one. Those are those things that we have to be laser focused on and be super intentional about. The second thing is, okay, what is something that is important that we get done, say, hey, over the next 3 to 6 months, but doesn't have to happen like right now. So that's the second bucket that you kind of categorize things in. And then the third one is what would be nice to have down the road that we could, eventually move up to, so perfect examples, like if you have an office, like, yeah, okay, having furniture for your clients to come in and sit on, great. But to make sure it's, you have the full, interior designer come out, we have pictures on the wall, everything like that. Well, we don't necessarily need that right now. So that's how I like categorizing things as you get started in those 3 buckets.
Okay. Do you have any other follow-up questions, Michael? Are you okay?
No, I do not. Thank you so much. Appreciate that.
Okay, awesome.
No doubt, Michael. You're welcome.
Esther has a question. Do you have an opinion about employees versus contracted counselors?
My favorite question. I love this. It can go so many different ways. Good one, Esther. So always say this. Contractors are always going to be cheaper for the practice owner because you don't have to pay all of their taxes. They pay their own taxes. So therefore, you earn larger profits when you have contract therapists. When you have employees, you are paying half of their taxes. You're paying 7.65%, just rounded up to 8% additionally of what you're paying them. Plus, even if you're adding benefits, that whole, that's a whole, different conversation on if you're adding that too. But that's the first piece of it, is that contractors are less expensive to the practice owner than employees are. However, here's the flip side of it. It depends on really what you want them to do, because sometimes it's worth that extra money depending on what kind of practice you want to set up. We have clients that have done both successfully. We have a client who has 26 therapists, about 20 of them are 1099s, and they have 4 different locations. Successful, doing great. They keep a little more income. We also have some practices that have like 12, 15 employees, all W-2. They're doing great as well. Less profit margin, obviously, but it really just depends on what kind of practice that you want to set up. One of the things we always ask, we're big on vision, and so we want to help you kind of fulfill the vision of your own practice. Our kind of our tagline is, we want to help you to get to your dream practice, as soon as possible. But that looks different, for everybody. So, hey, sometimes it's paying a little bit extra to have those employees, paying those W-2s, because then those people become what I like to call stickier, where they stick around longer than just, a hired gun, so to speak. I played football. I love sports. I'm a sports guy. So this is my analogy with that, is like, when you are having a W-2, that's like, building through the draft, where, you're bringing somebody in, especially if you're someone who starts with, like interns, associates, that whole deal, you're kind of building through the draft. Hiring a 1099, they usually, of course, fully licensed, more experience, but you pay more for those people, but then you can also lose those people easier if, hey, the next practice is paying them a little bit more. You know what I mean? So it's always it's a double-edged sword. It's such a deep, kind of conversation, but it really just depends on what kind of practice you want.
Can I follow up with my question?
Sure.
Yeah. So, I mean, right now I'm starting out just doing the contract because it is easier just to start. I know I can always switch over to employees at some point in time. And some of my thinking too is I think I want the mindset of a contracted worker where they take ownership of their own practice too, because they're going to have a little more say in how much they make, because the more clients that they bring in, the more money that they're going to get. So it kind of puts more responsibility on them. But then in the middle of it, I'm thinking about, well, what is that structure? Like that percentage? Do I do a percentage of how much do I keep? Or do I do a flat rate of here's the cost that you are to me? And so if you can give me this much money every month, then that does that. Have you found that there is a certain pay structure that works best within a practice for contracted workers?
Great follow-up. I always like doing percentages instead of flat rates. Now that percentage can vary, depending on multiple factors. Is this, an associate, fully licensed? What's their experience level? Are they, a different a different specialty than you are, which I love doing when you're doing groups, is don't bring in, or not don't bring in, but like let's spread it around. Like if you don't work with, with children, with adolescents, then if you're starting a group, bring in somebody who does. You know what I mean? So things like that I love doing. Um, so the reason why I like doing a percentage base is because everything's going to vary. The income you receive from insurance companies, from various insurance companies vary, if you take insurance. The your overhead of course is going to change too, so that doesn't necessarily play into the what you're paying them, but it cuts into your profits overall. So I always want to do a percentage, and then I usually further the percentage one step further. Is when you're hiring somebody, I like doing a tier. Whereas, so hey, if you're expecting this person to see, have 15 sessions a week, well, hey, maybe we do a 60-40 split at 15 sessions, but then for session 16 and above, we do 65-45. So something like that. So 65-35. So then that gives them more incentive to see more sessions, but then also it makes sure that we cover our bases from the start. And to your point, where they're kind of taking ownership of that, like, who doesn't want a higher pay? So, you're already getting paid per session, but then having that second tier for them to hit gives them more incentive to see more clients. But then it also makes sure that your overhead, and we know that, hey, based on what their average billing is, we're going to make this amount of money. We know that their overhead is this amount. And so, hey, this is our earnings here. So once we hit that level, we can give them a bigger cut of it, but it just also incentivizes them to get their bigger cut, but it helps us out overall too. So it's a little bit of give and take, but our baseline is still covered on the profit side.
Another question.
Sure.
Have you ever worked with a practice that has kind of done it as kind of like a split? I would kind of almost see it as like a sales job, where I do have employees, I give them a really like base pay, but the more they do X, Y, and Z, the more incentive and more like I then put in a percentage of things to like incentivize them to do something bigger and better.
Yeah.
Okay.
No, I like that. I think that can work. I mean, you guys got to think about it. We're all human. We're all incentive based. So that's why I like setting incentives like that. Like, perfect example. This is one of the things I say in all my documentation when I talk about the IRS as being a reward system where they reward you for different things. But think about it this way: any reward or loyalty program, you're going to tend to, float to that more to get those Starbucks stars, to get those Amazon reward points. You know what I mean? It's an incentive because they want you there. So the same thing should apply, with your staff. You do want to incentivize them in different ways. So yeah, any incentive that still makes sense, for the bottom line overall, I'm absolutely game for.
Okay, we have a few questions, Alan, but I do want to, Lewis, I see yours, but Vicky's goes right with what we're talking about. So I'm just going to throw it in here real quick. Yeah. Do you also recommend percentage splits for W-2s as well as the contractors?
I do.
Okay.
I do. Yeah. I kind of like it. I kind of like it for both. Once again, because we're still kind of leaning on that, incentive base. So even for W-2s, I like it.
Okay. All right. So Lewis has a question. He says, just curious if you would be able to let us know the most common and most costly mistake new practices make when starting off.
Ooh, that's a good one. I like that one, Lewis. The most common and costly mistake. I would say not having your business foundation set up. I've seen it so often where, where practice owners start your practice, start seeing clients, the incomes, coming in. If you're solo, if your group, really doesn't matter, but You have more control of it, especially when you're solo. It's more important when you're a group. But not having that foundation set to where you know what you're making, you know what your income is, because I've seen where people have been doing it, 3, 6, 9 months, a year. Like, hey, I'm making money. I'm having, 20, 25 sessions a week. I got a decent reimbursement rate. I don't know where my money's going, and that to me, I would think one of the worst feelings to feel like you're working hard, you're doing all the things you're supposed to, you laid the foundation, you're having sessions, you're putting in the time and effort, but you don't know where your money is. You know what I mean? So I would say that's one of the biggest mistakes that I've seen, because to me, when you're doing that, you're just on the hamster wheel. You're just going and going and going. But what am I doing this for if I'm not seeing anything from it? And I'm not even understanding where it's going. So I think that's one of the biggest things, is to have that business foundation set. And like I say, I know this is, difficult for most practice owners, not all, but most, because that's just not your natural instincts of, just learning the business side of it, and the financial side and the tax side. But I've seen that, because I've seen people doing it for, years, couple years. And it's just like, I'm working, I'm working, I'm working. I think I'm making money, but I don't really know if I'm making money. I don't really see it. So I think that's one of the, probably one of the biggest and most frustrating things. So to give you the opposite side of that, how I think you kind of fix that, for one, I always suggest is having a business bank account, and then setting up some type of, accounting system. Like, hey, always, hey, I'm a CPA. You guys come to me if you need help. Go to any CPA there, or if you're working with one, hey, do it. But at the bare minimum, even doing it yourself, have your business account, get set up on an accounting system. Whether that's QuickBooks, we personally use one called Zero with the Xero. Um, Getting that set up, because that will help you see what your income truly is, what you're actually spending, and get better visibility on your overall, finances. So I think that's the first piece of it. And then the next piece of it, which is, a little more difficult, of course, unless you do talk to professionals, making sure that you're tax planning. And so, like I said, from the jump, there's so many different things for business owners, whether that is, we talked about the S corp election, whether it's something like that. Wouldn't necessarily suggest that starting out. I think that's more of an established company deal. But hey, just making sure, hey, if I'm working at home, I'm writing off my home office. If I'm going out to, different network events, I am, writing that off. I'm deducting those things. As I mentioned, underutilizes mileage. If I'm driving around, if I have to go to, Home Depot for something, or Office Depot for something, I'm buying supplies, hey, writing that mileage off, different things like that. There's some advanced tax strategies like the Augusta rule, where your LLC can pay you to host meetings at your house, things like that. We like setting up a board of directors where you can have a quarterly board meeting and write those different things off. So those are things there that are also costing you, probably thousands, by not implementing them into your business. I was talking about the reward system. And that's what I always say with the IRS. The IRS is a reward system. They reward business owners and they reward investors with different tax deductions. So you're a business owner once you start. So we want to be getting all those rewards, all those incentives. We want to be putting that, into your practice. So yeah, so those are some of the biggest mistakes I see, by one, not knowing your overall numbers in general as you get started and as you get going, and then not taking advantage of all the different, tax deductions and planning that there is out there.
Thank you so much.
Of course.
Okay. Nicole has a couple questions. She says she started using her business account for business expenses. How does that impact my taxes for next year? I have worked full-time with the company as a salaried employee. Do the taxes from my salary job offset the taxes from the business? And she says, do I need a payroll service or a program if I'm the only provider?
Okay, let's see. Yes, so they all work together. So look at it this way. Yeah, so your full-time job as a salaried employee. So if you spend more than you make, doing your practice on the side, then is going to be able to deduct from the income you made, from your other salary job. However, if you make more money, then yes, it's going to add to that income. However, here's the thing: when it adds to that income, is because it's no longer, well, it is regular income, but when you are a business owner, you also get hit with self-employment tax. So there are additional taxes that you're going to pay for that, side business income. So they do all play together. So your salary job plus your new income all go on your tax return together. But this is why, I personally believe that, tax planning is so crucial, because you want to limit that self-employment piece as much as you can. Because self-employment tax, you're looking at an additional 15.3% of all the profits you make in your business. So that's why you want to make sure that you are, kind of limiting that as much as you can. But here's the beautiful thing about this: like I said, you get to deduct everything, because I always tell people to think of it this way, as we're talking about salary and self-employment job. When you earn a salary somewhere, so let's say you earn a $75,000 salary. Well, as you know, they take taxes out every 2 weeks when you get paid, and then you get to spend what's left, right? After taxes are taken out. When you're a business owner, you get to make as much as you can, but then you get to deduct expenses, and then you get taxed on the bottom of what's left. So what we want to do in tax planning is making sure that there's as many expenses in there that we're getting to deduct, so that there's not that much left for them to tax at the bottom. So that's the kind of difference between the two. But yes, both of those do absolutely play into one another, as to where that gets added. Your side income, your self-employment income gets added to your salary income.
Okay.
And then, sorry, there's another piece of that. They need a payroll service or program if I'm the only provider. Yeah, you do not need payroll unless you're an S corp. If you're LLC, PLLC, do not set yourself up on payroll. There's no reason to do it. No reason for the added expense. I've sometimes seen that where people wanting to pay themselves from their own business and that whole deal, which is fine. When you are a LLC or PLLC, you do need your separate bank account. You need your separate business bank account, but you just transfer, hopefully profits, just transfer that over to your personal bank account, at whatever rate you see fit. Now, don't spend your personal stuff out of that business bank account, transfer it over, and then pay with personal items from your own bank account. But it's honestly as simple as a transfer, but you do not need a payroll service or provider until you are a S corp.
Okay. Another part to Nicole's question: her
Sure.
husband has a traditional job, and now she's working for her private practice. And she's working only at a private practice. She said, "Am I filing jointly with him, or would it be separate because I'm a business owner and not technically an employee?"
Oh, good one. It would be together. So if you guys, so basically, I would suggest filing jointly. There are some, a handful of tax scenarios where it might be worthwhile to not file separately. But typically, if you're married, it's always best to file separately, because if you're legally married, you only get two options: married filing jointly, married filing separately. Married filing separately is a much higher tax rate. And you lose a lot of deduction. So if you're married, I almost always suggest married filing jointly. But of course, as with everything in taxes, this can vary, on your personal situation. But in general, married filing jointly. So because he's an employee, kind of exact same thing what I was saying earlier. If you have a salary, or if you have private practice income, or if your husband has a salary, you have private practice income, it still all flows together in one bucket of your full taxable income. But on your practice side, once again, what I was mentioning, you want to make sure that we're putting as many expenses in to reduce your total taxable income, at the bottom. But yes, it will typically, it's best to file together, and then your practice income just goes on what's called a Schedule C for business. Whereas, you have your income, all your expenses, you get to write off, your home office, different things like that, and but it all goes on the same individual 1040 tax return if you're filing jointly.
Okay. Thank you. Sherry just mentioned that she uses You Need a Budget for
Yeah,
bookkeeping and budgeting. So I guess another resource.
I love that.
Thank you, Sherry, for sharing that.
Yeah, thanks,
Elise,
Sherry.
Elise has a question. She says, I began my practice in May and could not get approved for an official business bank account because I couldn't prove income for the business. I set up a separate account for my personal one, but it's not formally a business account, more or less a nickname personal account with my business. Will this hurt me for filing into your taxes this year?
No, good one, Elise. It won't. It won't hurt you. I would still get a business one um, as soon as you can, because it's helpful to at least kind of use a separate personal account for business, even though it's not an actual business account. However, when you have, let's see, do you? I have a follow up for you, Elise. Do you have like a LLC or PLLC actually set up?
Yeah, so I am legally an LLC, and I have it's a totally different bank as well. So my
Okay.
personal banking is one, and then I have this account with a totally different bank system. So they are completely separate, and I transfer the money between them as I
Okay.
move money and have expenses and things like that. But it's not like a business account with a business card because
Got
they
it.
were like, well, you haven't made any money, so we can't tell, like, we don't want to take you on basically. So I'm just kind of waiting to have had enough income,
Got it.
and it's titled, my name is the complete LLC name. So I
Mhm.
put as many protections as I could in place, but yeah.
No, I got you. I got you. Yeah, that's wild. I actually haven't heard that before because typically I've seen clients have been able to open a business bank account just as long as you have your certificate of formation from your LLC. But yeah, so it's fine to use that personal account for now. At least you're kind of separating it out. As soon as you can, though, I definitely would get a business bank account because one of the stipulations of having an LLC is kind of having a business bank account, having those transactions, separately in there, separate away from your own personal. So for tax purposes, go into your tax person, it'll be fine. Hey, you still pull out the statements from that one, personal-ish business account, and at least everything's there, kind of siloed, so that's fine. But just to be in compliance, I would, still try to get that business bank account, open as soon as you can.
Okay, thank you so much.
Of course.
All right. And then Nate's letting us know that he uses Herd for bookkeeping.
Oh yeah.
So another resource.
Mm-hmm.
So we got about 12 more minutes. Anybody have any questions you want to put in the chat? If you want to raise your hand, ask away to Alan while you have him in this Q&A.
Can you see me and hear me?
Yep.
Hey, okay, cool.
Hey there, Nate.
So, hi. So, I am primarily in Michigan, and I want to see clients in Florida as well. Florida doesn't have a state tax. How do I go about keeping track of clients that I see in Michigan versus clients I see in Florida, and then filing taxes at the end of the year? Any tips on that?
Yeah, good question. I often run across this with a handful of with clients who see different people licensed in multiple states. Good for you for choosing Florida with no state income tax, so at least you won't have that to worry about. But I would say the best way, if it's just a handful of clients, then I would say just kind of track that income separately. Um, and then if you are, yeah, because you said you're the one using her, I would kind of let them know. And then I would have a separate account for your income earned in Florida so that that is separate from your income earned in Michigan because you don't want to be, because Michigan does have a state tax. You don't want to be taxed twice in Michigan for income that was actually earned in Florida. Now, they will tax you on your full amount, but you always get to pull out what was to a different state so that you're not taxed twice on that income. So let's say, for example, let's say you make a full, 100K for the year, but 20K of that is in Florida. Well, on your Michigan state return, you're still going to report the 100, but then we get to pull out that 20, so you don't have to pay Michigan state taxes on that, on that 20K that's in Florida. So that's what I would suggest is kind of breaking that out, within your bookkeeping, to make sure that you are not overpaying in taxes in Michigan for something that's truly, Florida taxes.
Perfect. So the suggestion here is if I see somebody in multiple states have an account per state.
Exactly, and that's what I was going to say. So if it's just a few clients, you could just have in your chart of accounts in your bookkeeping, just have Michigan session income, Florida session income. However, if it gets to where it's kind of sticky or where it's quite a few clients, then I would actually maybe even suggest then a separate bank account, one for Florida and then one for Michigan. But if it's just a handful that you could track easily, then I would just have a different chart of accounts line. But if it begins to grow and grow, I would have separate bank accounts.
Is there a number we're looking for? More than a handful of people? A number of...
If it's something you can easily track as to what's specifically Florida income, then that's what I would say would be just a handful. If it gets to where it gets tougher for you to track, where it's more than just a handful of clients or it's taking a bunch of time, then that's when I would say, hey, maybe let's set up a full, a different bank account so that we know everything in this bank account is Florida, everything in this bank account is Michigan.
Okay, and that bank account could be established here in Michigan as well?
Absolutely. Yeah, absolutely. It's just a way to separate the two so you don't overpay in taxes.
So with that, could that be done with the same bank? Is that opening two accounts in the same bank?
It could be done with the same bank. It was just that you would send your payouts from Florida clients to this bank account and your payouts from Michigan to this bank account.
Awesome. Wow, good to know. That's $1 million. Thanks.
Oh,
can I hop on Nate's question here?
Yeah.
So I'm envious, Nate, because I'm licensed in 2 states that both have income tax. One of them being very new for me. So for this calendar year, I won't meet the threshold for having to file there. Like I won't have had enough income. Mm-hmm. For future years, when I've worked more than 3 months with that license, that won't be true. So does your advice change on when both do have income tax? And for this year, when I don't have to file for both states, how would I separate that to not, it's New Jersey and Massachusetts, so how would I just do it for New Jersey and not the new Massachusetts license?
Okay, so explain this. You say that you don't meet the threshold for one of them this year?
Yeah, Massachusetts, I won't have made enough to have to file.
What's the threshold in Massachusetts?
8,000.
Before you have to file a state tax return?
Correct.
Okay. So on that, have you confirmed that? Who told you that?
The internet, but it was like the Massachusetts state.
Okay. I was just double checking. I don't know Massachusetts off the top of my head, so I was just making sure, because in my experience, every state wants a piece of their own income. So, if you earn, $50, they usually, want you to do that. Now, $50, of course, extreme, but that's why I was just curious.
Okay.
But anyways, neither here nor there. I just want to make sure. So I would say this is that, no, I think the same premise would apply even with 2 different states that both have taxes, because you still don't want those to be overlapped, where you don't want to be, especially because I'm pretty sure they're different tax rates. So you still want to keep, Jersey in this lane, Massachusetts in this lane, and be able to differentiate your income, from each one. So the same premise would actually still apply. Okay. Just to make sure that just make sure you're not overpaying or even potentially underpaying from one state to another on that.
Okay, and I'm gonna hop on the phone and confirm that, because you're right. I too was like, interesting that they're not gonna want their money. I thank you.
Yeah, because I'm like, even if it's $6,000, like it's especially my experience, especially East Coast states. The East Coast states and California are probably the worst, to where they definitely want their portion of their state income. if you earn income, if you're seeing clients in that state, they want it. But yeah, I would just double check that. But if it was on the, it was on the Massachusetts, state revenue deal, you're probably good. But yeah, I would just certainly confirm that, because like I say, just in my experience, I've seen that they want you to file if income was earned in that state.
We have about 5 more minutes left. Vicky has had her hand raised. I just want her to ask the final question, and then Alan, I know Nicole asked too. If you can just let everybody know how to get in touch with you after,
sure.
after you answer Vicky's question.
Of course.
Go ahead, Vicky.
Getting my mute off. So I was thinking back to the S Corp transition and trying to understand the tax implications, I guess, around that as both the owner and an employee, I guess, because you're functioning under both. With payroll, well, I had a practical question. I don't know if you would know this, but if I put myself on payroll, am I supposed to, since I'm technically an employee of the business, am I supposed to have like my own job description and offer letter and like breakdown of what my hourly rate is? I don't know how that works. And then also on the tax front, how did I assume taxes work just as normal under the employee salary versus like potentially taking owner's draws later on?
Good. Yeah, good question. So, I've never been asked that question. I don't think you have to have like an official offer letter or anything. That's a good one though. I might have to confirm that. Nobody's ever asked. That's a great question, Vicky. Nobody's ever asked me that, nor have I ever really.
I mean, it sounds a little silly to write myself an offer letter,
because
but I don't know if like
you have to,
legally I'm supposed to do that for an employee of the business. I don't know.
Yeah, no, you are supposed to, because what makes you kind of official is just having yourself on payroll. And so, reporting those payroll taxes, that whole deal. So that would be, kind of the biggest deal there, is making sure you're set up on payroll. Now, as far as what you pay yourself, the IRS has whole things on what's reasonable compensation, because the beautiful thing about an S Corp is that you forgo the entire piece of self-employment taxes. So let's say, for example, your practice makes, 120, you have 20K in expenses, you have 100K net profit. In an LLC, PLLC, you're paying 15,000 in taxes because of that 15.3% self-employment tax. However, let's take those same numbers, but let's say we pay you a salary of like 40K. Well, now you're only paying salary on that 40, only paying self-employment taxes on that 40 that you're paying yourself. And so that's why it's so powerful to switch to an S Corp, and that 40 that you're paying yourself is still a deduction for the business. So that's why S Corps are so powerful, because they reduce that self-employment tax greatly. But because of that, the IRS determines that you do have to pay yourself a reasonable compensation. Usually we like going anywhere, around 40%, 30, 40, 45%, give or take, of your net income. And so that's something we often review to make sure it's not too much or too low. But yeah, so you do have to set yourself up on payroll. That's typically good enough to determine you're an employee, of the company. And so, so that's what I would say there.
Thank you. That's helpful to know, even just the 40%-ish.
Yeah, exactly. Because it has to be reasonable, but sometimes I've seen people where they're paying themselves, they're making 100K in their business, but paying themselves like 85 of that 100. Like, yes, that's a deduction, but you're probably still doubling. You're still saving overall, from what you would be in a LLC and not being an S, but you're still doubling the taxes you would have to be if we could say we could pay you 45 and then you just take out a draw for the rest. Or what I like doing is getting some of those tax planning things in there. That's still a deduction that we don't have to pay self-employment taxes or any taxes on, because it's a deduction on the business, but still gets you money from the business to you directly.
Yeah, appreciate it.
Of course. Oh, you're on mute, LaToya.
Sorry about that. I saw you put your link in the chat so everybody can grab that and get Alan's website. Alan, anything else you want to share? You shared some really valuable information. This was really good.
No, thank you. You guys were great. These are great questions. I'm excited and happy to be here. Yeah, if you guys have any further questions, go to my website. You can book some time with me so we can chat a little bit further. But yeah, I'm always here to just be a helpful resource. So I'm excited to do it. Thank you for having me, LaToya. I appreciate it as always. And if you guys need anything, you have my info to reach out.
All right, we may have to ask you back again because it was some good questions.
Let's do it. No, this is great. I love stuff like this. This is fun.
All right, everybody, you have a great day. Make sure you copy that link that he posted and sign up with him, okay? All right, you all have a good day.